Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today's Tuesday. It's May 17th. It's about 7:56 in the morning. The market's going to open up in about an hour and 34 minutes to be exact. The Dow's up almost 400 points, which is, even at this kind of volatility, is beyond random, and the Nasdaq is up 235 points. I'm really concerned about whether these levels are going to stay in light of the fact that Walmart missed estimates and inflation weights on profits. There was a report that came out today. Walmart, the largest retailer, has seen sales growth decelerate from a peak rate during the height of the pandemic domestically. Still, the company has maintained revenue growth as demand remained resilient for the company array of products. Even as consumer prices have climbed across the country, U.S. comparable sales, excluding gas, closely watched metric, grew by a greater than 4%, and Walmart only used U.S. comparable sales, excluding gas, grew by a better than anticipated 3%. I'll take as much as I can at this point. We also have earnings coming out from Home Depot. On today, we have earnings coming out from Walmart. That's coming out in just a little bit. We've got Target on Wednesday. We've got Lowe's on Wednesday. And we've got Kohl's on Thursday. So we've got a lot of earnings this week about retail sales. And to add a little more fun to the mix, we've got the retail sales report coming out in 33 minutes. That report is going to be very, very, very instrumental because retail sales makes up a huge percentage of the economy. 2/3 of the economy is consumer. So this will give us a really good idea if consumers are still spending. If consumers are still spending better than expected, then the economy can't be really that weak because consumer spending makes up a huge portion of that. Let's talk a little bit about news. And then I'll get into the strongest sector, strongest stock, weakest sector, weakest stock. Why? Because it's Tuesday. What do you think I'm going to do here? I'm not just going to sit around here and look pretty. I'm just giving you guys a hard time. So let's see what's going on in the world today. Signs of progress in China's effort to bring outbreaks of the COVID under control appear to be outweighed concerns over weaker than expected U.S. and Chinese economic data. That actually makes sense. Investors are watching for comments by the Federal Reserve officials that might provide insight into the U.S. economic outlook, basically whether they're going to be dovish or bullish in terms of their 0.75 or 0.5 increase of rates. Markets are trying to gauge how companies and consumers are dealing with higher prices and whether central banks can help ease the problem. Major indices have been slipping since early April, and the volatility has been crazy since October. Tech stocks were the biggest losers. Apple fell over 1%. Big tech companies with pricey values tend to push the broader market both up and down, especially with interest rate sensitivity is high. The sectors that have been particularly heavyweight as investors worry about high inflation and rising rates. The Federal Reserve is gradually pushing its benchmark short-term interest rates off its record zero level, as most of us have noticed, where it spent most of the pandemic, and right now it's a balancing act between pushing us into a recession or increasing rates to just enough to keep the economy moving along. Lingering supply chain problems continue to feed inflation, and folks, it's going to get a lot worse in Europe over the next couple of months. And China's recent COVID lockdowns have raised concerns that things may get worse. And Russia's war against Ukraine, oh boy, don't get me started there, has already made high energy prices even more volatile, and that could draw out rising inflation. But there's a shred of evidence that inflation might have peaked the month before last. We'll see how that goes over the next few months, because last month's data showed that it wasn't at a 40-year high. I'm grappling here, folks, but seriously, there may be a sign that it could have peaked. Doesn't mean we're going to go down to zero, but the fact that it peaked may be a good sign, because remember, markets are always forward moving. U.S. crude oil prices rose almost 3.5% on Monday and are up more than 50% for the year. Natural gas rose 3.8% and have doubled in 2022. I've actually become more bullish on natural gas than crude oil over the last month and a half. I don't know if you've noticed, because a lot of the companies do both, but I'm changing my focus to basic materials and natural gas from crude oil. Not to say that crude oil is going anywhere anytime soon. Commerce Department is due to release its retail sales report in about half an hour. Home Depot, Walmart report their results. Target will also report on Wednesday. And as I said, Kohl's and Lowe's are also reporting. So there's a lot of retail sales, and that is huge, 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 huge. So far, numbers from Walmart are not good, but people are still spending. Now, looking at the broad market sectors. This is yesterday, it says today. Energy was leading. But look, healthcare, consumer staples, still very defensive. But again, look at communication services. Look at tech, look at consumer discretionary, look at communication services. Do you remember me telling you beginning of last week how it looks like it stopped going lower and it's now starting to go higher? That's big. Over 5 days, you will see that communication services is up here. And now, if we look at our stock fetcher, if you look at my filters, you will see under the 10-day, under the 11 sectors, you will see that communication services, folks, on a cumulative basis now, cumulative basis for the first time. Now, I want you to see this. This is cumulative basis, 18.72. We're now at 12.3 on a monthly. Consumer discretionary is at 15. Who told you this was going to happen a week ago? Cumulative now. And what's really interesting is if communication starts moving higher, it'll be very, very bullish for the market because that's been the sector that's been lagging behind, excuse me. And as you can see here, here it is, and I'm hoping it's going to continue moving higher. It's got Netflix in it. It has, the communication services got Netflix, it's got Facebook, and it has Google in it. So yes, it has a lot of market cap. Looking at market sentiment, put the call ratio, folks, still above 1. Still above 1. I don't know why it says 93, but it's above 1 right now. It's right here at this level, which means we're still in a bearish environment. We're not. This is a rubber band that's been stretched out. Notice we haven't had anything overbought since November. That's a very, very strong sign that the market is oversold and needs to come up to these levels. Once it comes up to these levels, the market will not be in an oversold environment, but it still remains oversold. And look at how much of the price data since November has been here. And that's when the volatility started. Speaking of volatility, VIX is now moving lower because the markets are rallying, at least for now, at least early in the morning. And I'm hoping the levels will go back to 20 over the next couple of weeks, which means the market will stabilize. The bond market, as you could see here, is starting to get more and more choppier. I'm hoping this choppiness will turn to some upside momentum, which will cause interest rates to actually go lower or stay at these levels and not go higher, which will relieve some pressure from the stock market. Now, as I told you guys, communication sector is no longer the lagging sector. It's now consumer discretionary. So now, but energy still leads. So as far as the energy sector, you can't go wrong with Oxy, VLO, or Devon, or even MRO, or Chevron. So Oxy, Valerio, Devon, US Marathon, Chevron, even Apache's good. These are all good. These are all good right here. I mean, you could just go with Oxy or Valerio. They're both just fine. These are the strongest stocks. Now let's go to the weakest stocks. So it says Netflix is still the laggard and PayPal is still laggard. But when we go here, we got Under Armour. That's consumer discretionary. Let's see if we could find some more consumer discretionary. Let's see here. Amazon. Oh, boy. Amazon. And Expedia. I believe Expedia, that's travel, but I think that is consumer discretionary. People travel. And then we got Disney here. We got eBay here. So keep an eye on these stocks. Again, energy is still leading. Basic material, energy is where you want to be right now. If you look at the major sectors, and again, I'm only saying this if you're on the bullish side, energy, consumer staples, utilities. But it's really interesting that communication services is no longer lagging behind. So Amazon's really bearish, but the most bearish consumer discretionary stock is this one right here, Under Armour. Take a look at this. I mean, this thing is terrible. I mean, this thing looks like it's going to rally, and then we'll sell it when it does. And again, the strongest stock would be VLO. Real simple. It's good to know these things. Now, the markets may be a little overextended to the upside on the energies right now, so you may want to wait for a pullback. Keep your eye on today's retail sales report. If Walmart and other retailers shrug earnings, that'll be a very positive sign. So you want to keep your eye on the following companies. Lowe's, right, which is, wow, it's up $5 overnight. You want to keep your eye on Home Depot. Ooh, it's up 3% overnight. Look at that. You want to keep your eye on Target. Ooh, look at that, down 6%. But you got to keep your eye on these. And Kohl's, keep your eye on Kohl's. So these are looking pretty good. So again, keep your eye on these stocks, the retailers, and the report's coming out in about 24 minutes. It'll probably come out by the time you get this. And just to give you an idea of what the range is, just to give you an idea, I know you guys like this, 8.8 consensus, we're looking all the way from 2 to -4. It'll be interesting to see what it is minus negative vehicles and gas. This is going to be a real big report. This is a huge component. Look, here we go. Consumer spending typically accounts for 2/3 of the GDP and is therefore a key element in economic growth. And that's what I've been echoing here. This is a huge number, and it can really shake this market up. So keep your eye on this number. It's very significant. Consensus is 0.8. We'll see where it goes. I'm hoping it's going to be better than expected. Fingers and toes crossed. Now, before I let you go, I've got something important for you. If you're one of the traders still waiting for the stock market to crash, don't hold your breath, because I don't see that happening anytime soon. In fact, there's one key indicator that has me feeling more bullish than ever. In light of this positive news, I've decided to host an open house at 2 p.m. Eastern Time on Wednesday, May 18th, and it's free. It's free for everyone to attend. Inside, I'll cover everything people need to know about key indicators that I've discovered, and I'll show you why I'm happy about the oversold market trajectory. You don't want to miss this. Click on the link below, RSVP for this special event. You don't want to miss out. It's going to be live. I'll answer all your questions. It'll be meat and potatoes only. I promise you. You guys are going to love it. Follow the link to RSVP for this live event tomorrow. I'll put everything together for you. I promise. No BS, no red Ferraris, no lifestyle, just heavy-duty market action. Follow the link below, and if you're watching on YouTube, you could find it in the Wealth Press YouTube channel. Hope it helps. Have a great day. Send me some love letters, support@marketgeeks.com, or put it in the chat below the video. I want to know if I'm helping you out or not. Otherwise, what am I doing these videos for? Bye, guys. Keep your eyes on that retail sales report.